Now, investing is the act of allocating resources, sometimes money, with the intention of turning a profit or making an income. You can invest in endeavors such as starting a business or in assets such as buying real estate in an effort to sell at a later date to turn a profit. But today we will talk about a very different type of investment, financial securities. And today we will stop by Stocks and Securities Limited to talk about those. I'm Amita Prasad Webb. Please stay tuned. You're watching Banking with Us. Stocks and Securities Limited was incorporated in 1973 and commenced business operations in 1977, primarily as a brokerage, focusing on Jamaican dollar stock trades. In 1996, they became a securities dealer and were able to deal securities in Jamaica. Ashley Elliott is the senior security trader and analyst at Stocks and Securities Limited. She tells us more.
We pride ourselves on being the second largest brokerage firm in Jamaica. We provide access to investing in the Jamaican market as well as the international market. And we focus solely on money management and financial security and independence for Jamaicans and their families. So we do so by getting to know the clients, their income, their expenses, their risks, as well as their goals in the future. So brokerage is basically the medium in which people invest. We provide guidance, SSL provides guidance and expertise to clients to find out what they need to invest in, how they need to invest to meet their goals in the future. You look for a brokerage firm that has longevity, that has accountability, so that you would be able to trust what the brokerage firm is providing and the expertise that they have to give to you. Investing, simply put, is just putting your money in a financial instrument. That is whether it be money market instruments like fixed deposits or stocks, bonds, even real estate. It provides clients with a financial buffer and independence for retirement. The first thing you should do is definitely call SSL. And calling and speaking to someone who is an expert, talking to a financial advisor, getting to know who you are, your income, your needs, as I said before, your goals, and understanding what it takes to invest and what you have to do to invest.
What is a security?
Any financial asset that can be traded tends to be considered a security. In other countries, the definition can be more specific, applying only to some financial assets. The most popular categories are 1. Equity securities such as stocks, 2. Debt securities such as bonds, 3. Derivatives such as futures or options. All in all, it works like this. A. An entity called the issuer, for example a company or a city, needs capital. B. The issuer releases a security that investors can buy. A security like stocks, which might give investors ownership in the entity, or bonds, which give them the right to receive their capital back plus interest. C. Investors can keep their securities or sell them on the open market. As can be seen, securities represent an option for issuers who want to raise capital that might be better than, let's say, a bank loan, whereas for investors, it can be a potentially worthwhile money-making opportunity. Win-win. In the best-case scenario, of course.
We launched our financial planning segment in 2015, and we have 3 different products spanned across Jamaican securities and international securities. We have our money managers, which is strictly Jamaican equities. We have our plum plans, which is strictly USD securities, so securities, stocks, bonds, and preference shares. And we have our safe solutions, which is strictly ETFs, so exchange traded funds, a basket of securities that provides clients a safer way to invest. Those Jamaican securities we choose, so it's non-discretionary. We choose, the client has no say in what we invest in. So they talk to us about their needs, so whether they're conservative, they're aggressive, or they're moderate, and we choose the securities based on those needs. So if you are an income-based client and we know that NCB provides very good dividends, then we'll put you in NCB. We'll put you in SBL that provides very good dividend. Our plum plans, as I said, strictly USD securities. Same thing like the Jamaican securities, spanned across conservative, moderate, balanced, but we also have very aggressive as well. This, just like before, we choose the securities based on your needs. So aggressive, more tech stocks, probably Amazon, probably Apple, probably Google, but more conservative may have been like Johnson & Johnson, that would provide some stability, preserving your income while giving you returns. So risk level really is what you see yourself sacrificing based on what you want your goals to be in the future. So you determine how much or how aggressive, as I would say, how aggressive you want to, how much money you can put in right now to reap the benefits in the future. So when I say risk appetite, I'm talking about conservative, moderate, aggressive, and how that determines your return in the future and the securities that you invest in. Risk appetite or level, simply put, is just the pace in which you get returns. So conservative would be at a slower rate. Aggressive is quicker. You would get returns in a week. You can get returns in a year, but it's larger and quicker than if it was conservative. Moderate is a mix between the two. So you can have a security that can preserve your capital but provide high returns. So we also have safe solutions, which, as I said, it's strictly exchange traded funds, and exchange traded funds are a basket of securities. So you would have it trading like one stock. It's one stock, but it tracks multiple securities based on an industry. So you can have a stock at exchange traded fund that just tracks tech, or just tracks consumer discretionary, or just health.
Coming up next, financial goals. Sheldon Thomas, the asset manager at Stocks and Securities Limited, speaks to the importance of financial goals when investing.
Some of the key things that you should do prior to investing is to ask yourself a couple questions. What is it that I'm trying to achieve? I would like to achieve. And the second thing that you will want to really ask yourself is the timeline, the time in which you want to achieve those goals, whether it's a 1 year, 2 year, 3 year, or 5 year, and maybe if you are a young family and you have kids, you're thinking about education. That's an 18-year period. What that does, it will help to say, okay, then go into a conversation with a financial company like SSL and to say, okay, I would like to some assistance to plan for my child's education. And then the SSL as a financial advisor will be able to guide you accordingly on some of the products that you will be fitting that profile of yours. Financial goal, just to bring it down, to say that financial goal is, say for instance you want to buy a house, and you know that one of the first things that you will be asked if you have is, say, a down payment. And say for instance, so when you said to get that down payment or to accumulate that down payment, one of the ways of helping you to meet that goal is really financial planning and investing in financial products. When you take, say, like out of your salary, a certain amount of money and put it into a financial product, what would cause you to say take as long as, say, 10 years may, because of the return, interest, or capital gains on that invested funds, it will be able to reduce that timeline from 10 years to, say, about 3 to 5 years, and so forth. So that would be that gap, and that's how financial goal and financial product and planning really comes together and really makes sense for an investor. When you have a financial goal and you approach a financial institution like an SSL, And in order to meet that financial goal at that specific time that you desire, you want to make sure that you're able to navigate the financial markets, because anything can happen. We see with the end of last year into early part of this year with COVID, and how the market just fluctuates, whether it's locally or internationally. So when my grandmother said, never put your eggs in one basket, meaning that when, as a financial institution, being responsible and thinking about your client, your customer, and their goals, you're going to put them in the best position to meet that goal. And meaning that you would not advise them to go into, say, stocks only or just bonds, but a mixture. And then you'll also advise them how to invest in different sectors as it relates to equity or bond, so that if a particular sector that is susceptible to the effects of COVID, another industry that, because even though persons are staying at home, they're going to need to access certain service to continue to work. They're going to need to eat. So that is how diversity comes into play, and it's so important. It helps to balance a portfolio and able to secure and to safeguard capital, and at the same time be able to bring in, to generate return that will still helps to keep our clients on that financial path in meeting their financial goals. The first stage of financial planning, where we spoke about understanding what is it that we're trying to achieve, how long, and once you have that in mind and you clearly understand that now, then you will say, okay, then should I be able to, if I'm thinking about my child's tertiary education, I can take on a little more risk compared to someone that is soon to be retired in the next 3 to 5 years. So you would not recommend persons to go into equities, because if something like another COVID or something similar, that will kind of seem, that will help to deteriorate that retirement portfolio. There will be actually not enough funds or savings in that portfolio, as if it was a tertiary education purpose, where if your child is like 3 years old or 5 years old, the market will, between 2 to 3 years old, will bounce back and to continue on that path of, that upward trajectory, and be able to meet that goal still in financing your child's education. So one of the things is that we ask persons, what is it that exactly, again, you would like to achieve? What is the timeline? And then we'll say, okay, then we're able to advise as a company, to say, okay, then we should go a smaller percentage in a particular security, whether it's equity or bonds or fixed income, or go more heavily in bonds, fixed income versus equity if you're looking to retire. And with SSL, we try to think about our client. What is it that they're looking for? And not just the current generation, but the next generation. What would they be interested in? And then if it's a situation that when we look on, whether it's a local stock market, an international stock market, and we think that the profile of the next generation especially is not there, we look towards private deals. And that's one of our another strength of ours that we have and we have been continuing to build out, is where in our investment banking unit, where we try to find deals that, whether local or internationally, that will be able to meet not just the current demand, the financial demand of our clients and potential clients, but also for the future as well. That's one of the ways of being financially responsible as a financial institution.
Coming up next, the importance of a financial advisor. Joining us via Zoom, Craig Clark, Regional Sales Manager, at Stocks and Securities Limited. He discusses the role and importance of an advisor.
I think it's important to highlight the roles of advisors, especially for new investors. Speak to us about what exactly an advisor does.
Thanks for that. So a financial advisor provides financial services to clients. So at SSL, we meet with clients and we provide financial services tailored to meet their financial goals.
And when I'm going about choosing a financial advisor, what are some things that I should look for?
All right, so the first step in choosing a financial advisor, I would say to visit SSL. You want to also get referrals from friends, people who have been there, done that, and had success. You want to find a qualified and certified person. And you want to ultimately interview different advisors, because the aim here is that you want to be comfortable with the person that is actually going to be managing your money.
What would you say are some good traits of a good advisor?
Some good traits of good advisors. So at SSL, we have advisors with good reputations, proactive approach, very calm, don't panic. We look at your portfolio from a holistic view, and of course, we have experience.
What would you say are some key things we should keep in mind when dealing with advisors as a client?
As a client, a couple things that SSL would want you to keep in mind. We would love for you to be transparent with us. The idea is that the bigger picture, or the more we know about you, the better able we are at providing solutions to satisfy those investment needs. So the idea is that your financial advisor could actually become closer to you, so they'll know some stuff about you that even your personal friends don't know, because, as we said, talking about money, and that's a very personal matter. You may not start off knowing everything about different investments, so it would be nice for you to have an advisor that will actually take you along the way, teach you the different ins and outs, the different type of assets, asset classes, stuff like that, and of course the different service offerings. So you want to ensure that you're able to get in contact with your financial advisor.
Understood. Remind us, if we are to stop by SSL and open a brokerage account, how do we do that?
Excellent. So to open a brokerage account at SSL, it's very easy. We would like one ID, one TRN, proof of address, source of fund, name and number for referrals. And that's pretty much it. And of course, we have our online where you can go ahead and do the application there. Minimum to start a brokerage account, 150,000.
Yeah, it's very reasonable. Is there anything else that you think is important that you'd want to add? Great.
So the main thing I would say for you, the takeaway is when you're choosing an advisor, you want to become comfortable with the person. You want to be transparent. The more we know about a problem, the better able we are to provide a solution. And of course, be willing to learn. Be a bit passionate about your money. Because remember, at the end of the day, you're coming to us with your money, but it's still your money. So we're asking you to be a bit passionate about it and engage with us and let us go on this journey together to achieving financial success.
All right, and that's an important point, achieving financial success.
Did you know the Jamaica Stock Exchange, JSE, started operation in 1969? The JSE's principal mandate is the mobilization of capital to facilitate the growth and development of companies and, by extension, the economy. The basic functions of the stock exchange include to provide an additional channel for encouraging and mobilizing domestic savings, to foster the growth of the domestic financial services sector, to provide savers with greater opportunities to protect themselves against inflation, to increase the overall efficiency of investment, to facilitate privatization, and to improve the gearing of the domestic corporate sector and help reduce corporate dependence on borrowing.
And that's it for this week's episode of Banking with Us. Be sure to check out your nearest brokerage to select the securities that are right for you. I've been your host, Amita Prasad Webb, and please stay tuned until next week.